Hello, everybody. Welcome to the Trading with Ashley show and happy weekend. It is beautiful where I live right now. It's such a blessing to be outside. I wanted to talk about everything that's going on this weekend that will definitely affect your trading this week. And I did a little homework for you. And I know that the headlines this morning, when I woke up, they were talking about the exemption for the tariffs, and they really wanted to focus primarily on Apple and the iPhone. But I did some research, and do you know there is about 40% of the goods that were going to be tariffed or not going to be tariffed? They're on the exemption list. So I pulled the codes and I deciphered them, and I'm going to show them all to you so that you can see what is going to be exempt, and we can discuss how that may affect your trading. But the other thing I wanted to talk to you about is what to do if you want to jump in on the frenzy that will more than likely happen this week, especially Monday as the stock market opens. So I wanted to navigate through some of that. So first, let's go look at the codes themselves and see what is exempt, and then we will get to the trading dynamic. Let's take a look at what I found. So this is the exemption from the reciprocal tariff list. And this is kind of a challenge because they give you all these codes, but they don't explain them. So I had to go search and determine what these codes meant. Let's go take a look. If you look at this list, they grabbed hold of this main one, and it's smartphones and cellular networks. But look how many other things are on here. You have automatic data processing machines, so laptops, servers, the parts and accessories that go along with that. You have machines for manufacturing semiconductors, flat panel displays, solar cells. You have semiconductor-based storage devices, color monitors. So there's quite a bit on here. So this is affecting a lot of the tech stocks. This is a very important dynamic. And so I'm surprised that more haven't picked up on this. Maybe they will in the coming days. But I am going to post the complete list here so that you can look these up, and it may affect some of your favorite stocks. So how can you capitalize on this sudden change? Well, a lot of it depends on what positions you're in, how much cash you have available, and there's a couple of different ways. So let's talk first about if you were trying to be responsible and do covered calls on your plays so that you can gain a little bit of cash if it pulls back. Now, some of your favorite stocks, especially those tech stocks, the Mag 7, Apple, if you have covered calls, it will more than likely gap up and blow past your strike price. That's frustrating. Now, it's not a huge concern for your portfolio unless you ended up selling calls below your cost basis. That's an issue, and that's something that I never like to do, especially in this volatile environment. But let's talk about if you decide that you want to buy back a covered call. In my perspective, it's going to be better for you if you buy it back instead of rolling it. And let me tell you why. So let's assume you have a covered call on a stock, and your covered call is at $100. And you see on Monday that it's gapped up to 105. So you want to buy that back. So you buy it back, and when you buy it back, you take a $10 loss. So the premium you received, you end up buying it back, and now you're $10 in the hole for buying that call back. What I like to do when there's strong momentum behind a stock, I like to wait for that stock to rise by the amount that I just lost from buying back the call. So in that scenario, you would wait. If the stock was at 105, you bought back your call. Now you're down $10 because of the buyback. Now wait until your stock is at, let's say, 115 to start selling calls again. That way you're made whole from the amount that you used to buy back the stock. Now the stock has appreciated in value, and that allows you to not suffer financially. If you were to do a roll, you would immediately roll and select a new strike price, probably having to go really far out. I'd rather the stock's upward momentum to compensate me than locking into a covered call that's 2 or 3 months out. So that's really something important you should consider. Go through your plays and make a determination. Maybe you have 4 contracts out there on 400 shares. Consider letting 200 of those shares get called away, maybe at the end of this week. Let those other 200 shares run by buying back the call and let it compensate you for what you're having to buy back. So that's one way to consider it. There's something else. It's one of my favorite strategies when you have upward momentum, and it's the buy right. Now, you have to be okay with the call away. But if you look at the actual return on capital, you'll be fine with a call away as long as you select the right strike price to have your shares called away. Now, the buy right is when you simply buy 100 shares of a stock, you immediately sell a covered call on it. Usually it would expire at the end of the week. You'd be comfortable having your shares called away in profit at the said amount. Now, if you do that, then calculate the amount of stock appreciation coupled with the amount of premium, and you will see that your returns, your annualized returns, will be significant. So that's another thing that you can consider. Now, let's say you're sitting on a lot of cash and you're like, gosh, this is just going to keep running. Of course, there's always pullbacks, but one way that you could take advantage of some of this week is you can sell at the money puts. So let's say a stock is trading at $120 and you really wanted the stock. The forecast shows it might get to $200 in the next year. So you would be okay then buying 100 shares and letting it ride up. Well, instead of doing that, why don't you consider selling a $120 put that's right there at the money? That way, if you're not put the shares, at least you're paid handsomely for in premium for the stock. Then when the stock does retreat back, you've got more cash to actually buy the shares with. That's another thing you can do. Now, for those of you that aren't yet approved for options and you want to get in on the swift price action, consider watching the price movement early Monday morning on leveraged ETFs, and then you can buy those when they pull back. Inevitably, people had purchased them in the last several weeks, and they're going to take a little bit of profit once it spikes up. Then on the pull down that inevitably happens, go ahead, buy you a few shares and let it ride back up because of the excitement. You're going to have a lot of buyers that are ready to purchase again. And then go ahead and sell it, maybe even the same day, so that you can get out in a little bit of profit and jump on this momentum. Now, because we are in a news-driven cycle, anything could happen. Any headline can come out that takes everything the other direction. So you don't want to put too much of your capital at work right now. Eventually, things will settle down. The stock market will get more predictable, and we will be back to using our technical analysis to get in and out of plays. But this may help you as you're preparing your trading plan this week so that you can at least make a little bit of money on all of this movement that will take place early this week. Now, I need all of you to do me a favor and do your community members a favor that watch this channel. I'd love for you to each put one ticker symbol in the comment section on a stock that you feel like is way underpriced, that's been beat up, battered, and abused, a quality company that you plan on either selling puts on or buying the stock and writing it up its Bollinger Band to the top of the band. If you'll do that, that will help give all of our community members some trade ideas for this week. Remember, if you're with me, Trading with Ashley, there is no trader left behind. Best of luck this week. I'll be talking to you soon. If you want more detail on how to properly do a buy right, watch this video right here and you will be well prepared for this week.